Yo, 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 yo. How's it going, everybody? It's been a while since I've been streaming from the home base. Been slammed with meetings and calls and dev work and managing the community and um, back to tweeting a little bit more, charting. We're waiting for that global liquidity cycle to kick in. So I got, MGC's in the back. He's rebranding. He's MGC now. He's like the OG MGC, baby. Get used to it. And yeah, so I'm happy to bring him up in a second. But yeah, we're going to be talking about the ETH ETF inflows are finally positive. Obviously, the Pulse chain is at near its low levels, but that's just screaming opportunity to me. I think Ethereum and Bitcoin have been seeing some turmoil in the markets lately, but that's all like pretty much last call. Take advantage over the next few months as this thing kind of levels out and, don't get scared, get greedy. When others are fearful, get greedy. All right. So other things we'll talk about maybe in the stream is the solid index. Obviously, maybe you don't know that the two solid pool is paying like 55 to 60% APR, and two fucks, the emissions token is up like 65 or 70% off the lows in Pulse terms. So that's another huge, cool investment opportunity out there on the Pulse chain. I also had a talk with the Pulse Project Pi guys on their liquid staking platform. That's pretty much going under the radar by most people, and expect some content from us in the next week or two stream here on this channel. So without further ado, MGC Money Gang Crypto, how you doing, buddy?
Yeah, it's good to be on, man. It's been a while. How you doing, sir?
Doing great. You're always a bright light in the space, and dude, I don't know if you guys know this, but this guy's like a freaking titan. If you see him in the flesh, he's like 6'90".
Yeah, 6'90". That's exactly it.
What's new, man? How you doing? What the hell? What have you been up to?
Bro, to be honest, I've been focusing more on X spaces. I've had the opportunity, obviously, to be on Narful's show for the meme coin space. Mm-hmm. And then it's just become a kind of regular deal there. And then I got connected with a lot of Solana guys, a lot of base guys as well. Kind of exploring them. That sounds proper sus. exploring.
It's not what it sounds like. It's not what it sounds like. I promise.
They're clipped. There you go. It's going to go all over Twitter. But understanding what's going on, like the fundamentals of what's going on with Pumped Up Fund, what's going on with the spaces over there. I have a close friend who's over in that system, so understanding that kind of ecosystem and then how that
you're out there learning about these other. What the hell else is going on in the world of crypto? I think that's a lot of hexagons have done that now over the last year or maybe even longer in some cases, and it's good because it's healthy because now we're learning where the pockets of innovation are happening or where the opportunities are at, and then from the lessons you gather from that, you can bring it back home to Pulse chain and see how it works over here.
I wouldn't even say it's innovation. I think it's just like convenience. That's probably the best way to say it.
Like the meme coin pumps and stuff.
Yeah, Pumped Up Fun is just like it's a bit of a shit show. Excuse my language. It's nuts. It's like it is like a casino. It is a big gamble, and when it runs up to hit a certain liquidity to go onto Radium, like the devs usually just rug, or like significant people who sniped it early. So, for example, on our chain, if someone gets sniped, people get very, very funny about it. And obviously it's like inside Kabul, all this stuff.
It's funny because Crypto Coffee calls that the immune system of Pulse chain. And I thought that's so adequate for an explanation. We do have that immune system effect on here that other chains don't necessarily have. They don't have that camaraderie or calling out the bullshit. And I think that's a strength.
Yeah, you don't know who the devs are on other systems. Like, it's very hard to know who the devs are. Like, how is Salil, who's this cheater who basically contacts celebrities and launches tokens on Solana and then rugs them, how is he doing it over and over and over again? And people fall for the same trap all over again. And he's made approximately 6-7 mil from insane. That. He made 25 mil.
I mean, you know what else? It's like, dude, I know for a fact, I hear through the rumor mill that, there are hexagons over there on Solana launching stuff, trying to bring some of that value back home, because like better us bring it back home and add value here than let these guys that are stealing 6 and 7 million from poor innocent plebs just walk away with the capital. So yeah, I mean, that's it's interesting. It's not a good thing, but hey, It's something that we gotta live and we gotta learn through. And honestly, it's kind of like free pickings out there on a lot of other chains. We do have a much smarter base of users. I think we have like the most power users in terms of like markets, knowledge, DeFi, and liquidity providing, and ability to navigate and use protocols. I mean, obviously, the OG GOAT Ethereum's got a lot of those guys, smart guys too. But Pulse Chain's one of the biggest contenders, I think, for smartest community.
In terms of education, like even V3 education, things like that. For example, I'll give you a pure example. I'm having a conversation with a guy who was part of the team for Roost. Now, people know Roost from Base. And if you watch any of Andrew Tate's content, like Roost was on Tate Confidential, he said that the devs have kind of basically rugged it and taken away a crap ton of ETH. And we were talking about he's launched a Solana project and stuff. And I said, well, if you want to exit, if you're thinking about exiting at any point, you might want to go down the V3 route. And he's like, I've been in crypto for 8 years and I don't know this route. And I'm like, okay, so this is what happens. You might want to put up certain sell walls along the way in order to not just dump the chart down and destroy the price of what you're in and what you're promoting and stuff. And so just that, like the guy's been in for 8 years. He's been in way longer than I have when it comes to crypto, but he doesn't have that education. He's like, wow, this is good stuff. And I was like, really? Yeah, it's not taught on Solana. It's not taught on other chains. On Base, maybe on ETH, but not on necessarily other chains that are popping off right now. It's just G heaven. It's like, get the heck out. It's gone up to a certain market cap, get out. So it's all just market cap theory. It's all like, does it get to this many million market cap? Okay, boom, sell it down.
Yeah, that kind of language and vernacular and style of fast money trading, it reminds me a lot of like B Roots, for example. He kind of bases a lot of his analysis off market cap and like the meme theory that he has and stuff like that. So it's definitely like a framing that like a certain class of crypto users holds true, and then it works for that kind of style of fast money trading. I would hardly call it investing.
No, it's not holding onto a project or looking after a project. So it's like
I think there's room for that too, but it's interesting how that's really all that attracts new money, right? It's unfortunate that the long-term investments don't attract new money. And I don't really have a complete solution quite yet, but I think that's what's going to lock in the gains on Pulse Chain eventually is that, after like the base is set, right, and the prices are up 5 to 10x. I mean, those are locked in because you have like a refined set of holders, like a holder class that's in it for like a more of a long-term investment versus a lot of this other stuff. So, kind of my thoughts on that.
And the thing is, we're in this sector or this time period where that's popular right now. So I think when we all hang around for about 3 years, 8 months for a bull market that lasts probably 4 months, approximately.
You think?
So. Well, typically, 4 to 6 months, could be 8 months, could be extended out. But I think that a lot of people do hold for that period of time. I see someone saying like, how many times have we been buying the dips for the past 2 years? Most people are waiting for a section of time where things the mentality changes. Maybe there's more the kind of economics circumstances change.
Yeah,
we start to see a conversion of people putting more money into risk on assets. And then what we start to see is, this, what we call this euphoria stage or this like mega bullish stage where literally pretty much everything pumps. Yeah. Everything starts moving and it becomes like super hyper exciting.
Yeah, let's look at it. Like this is Bitcoin here. And I did this time frame analysis of just took the past bull cycles and ran it. And, Randy's got the idea figured out. He says until the dip flips. And that's basically how this happens. Like once it flips, it's just vertical insanity, and it's happened, for the past 4 cycles for Bitcoin. And so, like, if you just put a time frame on it, like, look, yeah, okay, Bitcoin could dip down back to the ETF levels here. It's about 25% drop back to I'm even calling like that 44, 46K region before it reverses. That's totally normal. This just feels a lot like 2019. Like you put one of these like descending, broadening wedge patterns on it. We're looking at a 2-week chart, guys, on Bitcoin. And so, I mean, this could take as long as it needs to take. And honestly, the longer this sideways period takes, the better it is and the healthier it is for the market. Because good money is going to get the crypto. And what I mean by that is stronger hands will get it. And then look at how that just perfectly will play with our bands here. If this is just like 2019, and you may get some chaos in the coming months where this does come down and test the lower edge of this logarithmic or regression curve around that like Ethereum or the Bitcoin ETF levels around that 44, 46K.
Well, how crazy has it been since the sentiment's changed in terms of like most of the big kind of YouTubers were talking about a early top, like a left translated cycle, although technically speaking, we've had a left translated cycle because we've had an all-time high before the halving, but we were all talking about, like Bob Lucas was talking about this idea of something early and that kicking in. And now, since then, we've had a lot of downwards to sideways action, even in the meme cryptos. And now it's like, well, actually, maybe the 4-year cycle is back on. Like maybe we get a top in September, October of 2025.
Yeah. Well, so not sure if you've been listening to some of my content, but I have been a proponent of let's stop here at Bitcoin at around 70K. Let's see this downside action and let's add time onto the back end of it. And let's go against some of this analysis coming out of like your Bob Lucas or your Kush Alameda. Super smart guys and TA, super capable guys, but I think they're missing all of that friction and overhead resistance we had coming in the short term from macro conditions, Germany dumping, jump trading liquidating, the Japan carry trade failing, interest rates staying elevated longer than were anticipated. S&P needed to cool off. I mean, you could name a million different things. And so this is welcome, right? This is a good thing. And I have a chart here that I want to show you that kind of reinforces what I have here, which is it's a composite index of the stock markets, of Bitcoin, of Ethereum. I gotta see if I can find it. Where did I put it? And it's got
take it so I can steal it.
Well, it's I want you guys to use it because it's super valuable. Let me see if I can find it. Okay, here it is. Okay, so check this out. So it was broadcasted all along. So what is this? It's BTC. It's the price of Bitcoin, Ethereum, the S&P 500, the Nasdaq, the Dow Jones Industrial, and the Russell 2000. And it takes the price of all of that and puts it on one chart. And you could see here since 2015, I have all these major patterns playing out. And what we just randomly went through, or not so randomly, you could say, was we made new all-time highs across all of these risk assets. We made new all-time highs, but we got rejected for 2, 4, 6, 8, 10, 12, like many weeks of action. I mean, total, it's 154 days of just rejection at that level. And so this was kind of forecasted ahead of time. And it's just, we need more time to build up a base here. And then it's just consolidation at previous resistance flipped as support. So when you look at this on a bigger time frame, you're basically flipping this previous resistance here from 2021 as support. Mm-hmm. This candle right now, it's a 2-week candle. It closes in 8 days. So what you'd want to see if you want this to continue higher would be this candle would close above, and then we'd build up. Now, if it closes below, it's gonna give us more downside. It'll probably come back and test these levels here, which a lot of that's coming from Bitcoin price, right? Because Bitcoin is a big number compared to a lot of the other ones. But so, anyways, it's very interesting that this was kind of like showing up in this chart ahead of time. It's
pretty cool. There's a nice little chart I'm gonna have to steal off you.
Absolutely. How do we want to rotate into what do you want to rotate into? Maybe some talk about the ETH ETF. Let me answer this question first. 1 second. Question was, do you guys see 42K or 52K with the current downturn in BTC? Steph has those levels. And so, yeah, that 44K level is somewhere between that 42 and that 46 number I was talking about. 44 is the Bitcoin wick high on the ETF. I think that's where the liquidity is. I think they want that price, and they want a lot of Bitcoin down there because the big institutions that have been accumulating aren't selling. So they'll just let this thing bleed, and they'll get the last round of that 33,000 Mt. Gox coins that just got sent to BitGo the other day. That's getting distributed. I mean, that stuff's going to run out, and then you're going to get into freaking pump season, which is CZ gets out of jail in September. Altcoin season goes bananas. $16 billion of cash gets put back in the hands of the FTX claimants. How much of that's going to hit the market? Probably a massive amount. So this is like a sweet spot between that October-November timeframe and now, where institutions can let this thing bleed down, do a supply grab, a land grab or supply grab, all of that supply down there on that $44,000, $46,000 Bitcoin range, and whatever happens to ETH as collateral damage is great. And then they buy all that supply up, and then they're going to send it up. So that way, all that $16 billion has to buy Bitcoin above 55K.
That's good points there. I mean, I'd be interested to get your thoughts. Do we think, I see that Harris's kind of campaign starting to be more crypto inclusive. I can't remember who it was, but someone was speaking from their camp. What do you think about November? Extremely turbulent time coming up to the election.
So I think it's a shoe-in. Trump's going to win the election. I don't see an outcome that doesn't happen. And I don't think that the current administration is very serious about being pro-crypto. I think it's all smoke and mirrors. And I don't think the people that would vote for that person cares about crypto, really, fundamentally. Because if they do, they're not voting for that person. So, because you're either, crypto people are in the know, they're a little bit smarter than the average person. So yeah, that's kind of my stance on it. And if I'm wrong, it'll probably be on the condition that something really messed up went down. Because there's just so much support globally, not just in America, for Donald Trump. I do have a soft spot for RFK because I think he's actually a little more adept in cryptocurrency and just general how the medical system works and some other things that I think he's really good at. But Donald Trump is just an amazing leader, and he left us a good economy before. And I think that, another 4 years of Donald Trump would be really, really bullish for the economy. And so I think that's what most people are going to put their hat on.
What do you think? Also, obviously, interest rate cuts coming up in September. First of all, what do you think it will drop? What they'll drop it to? And then the second question is, how does it typically affect markets, whether that be stocks and also crypto, historically when they have dropped rates?
Yeah. So my thought is, you're going to see maybe like a quarter of a basis point or a half a basis point change, and it's going to shift down. But unless something catastrophically breaks in the economy, that you wouldn't see like a sharp decline in rates, and that's a good thing because it keeps the machine going, and they've already committed to bond buybacks and taking care of like junk bonds, and they're going to have to money print. That's what the global liquidity cycle is pointing at, is money printing to solve for too much national debt, that had interest payments that need to be paid off and whatnot. So the Fed's going to print money to just keep the system going. They are committed to not letting a big major crash happen in the last 20 years. Any major crash took only less than 4 years to come out of, and lately it's only been taken like 6 to 12 months to come out of like a massive decline. So I think this is a side effect of having so much liquidity out there. And so when we look at these global liquidity charts, they're actually pointing at like, okay, the liquidity is coming, and here's the reasons why. And so in terms of interest rates, I think they're going to stay elevated for longer. And let's take a look at the chart here that I have. Let's see if I can find it as you're speaking here about your thoughts on it.
Yeah, I do think in the short term there might be a bit of a dip. It just typically happens with the changing of market conditions, particularly when you're moving from held rates for such a long period of time. But it is typically pretty positive for crypto in the long run, obviously, because a lot of individuals start to see more insertion from like quantitative easing and things of that nature. But in the short term, I think that with the election or the build up to the election will create some pretty extreme volatility. And then I believe that we'll start to see some real price movement to the upside if Trump is voted in. I just think that a lot of crypto now is kind of pro-Trump, even though, like you said, I don't think Trump knows half as much as someone like what's his name?
Robert F. Kennedy.
Yeah, Robert F. Kennedy, who, I mean, his speech at the Bitcoin conference was pretty damn cool. Really put me on side with him, and I really like his sentiment. But it's just it's a two-party race in the US. From my assertion of watching US politics, you're either red or blue, right? It's either Democrat or Republican, and I know he's campaigning on his own as a like
independent or a libertarian. Yeah.
libertarian is probably the best way to.
I'm with you on those things, and so like let's take a look at the Fed rates. So like anytime, so again we're back to that composite index, right? So the green line is S&P, NASDAQ, Russell, Dow Jones, Bitcoin, ETH, the price of all of it combined together to try to give us like an idea of what they're doing in conjunction with rates in white. And so whenever rates are flat, let's see, like whenever rates start to decline here, rates declined. This was actually this same exact pattern we're getting now, which was that descending broadening wedge pattern. Mm-hmm. And then when rates drop steeply here, you got the pandemic crash. Right. And you know currently we're stable. What happens during stable periods here is growth. Stable periods here, it's growth. Stable period here, you know, Bitcoin's kind of messing with it here a little bit because that was like that capitulation breakdown off some of that leverage that was on BitMEX, I think. So that's influencing this green line a little bit too much in this case. But generally speaking, maybe that was forewarning of the rate cuts early in this case. But who knows on that front? That's speculation. But but if I go back now and if I just show you like a longer term chart, like let's just look at the S&P forever, right? The all-time chart. Maybe that'll give us a more data to look at here. Going back to the beginning of time, right? So we can look at this and we can try to figure out, okay, well, in the past, since like 1983, since the 1980s when rates peaked, how has the market reacted? Well, as rates went down, the stock market went up, just in general. So, I mean, there is that short term like spikes and stuff. And then you could look for that. So like this decline in the market was met with that little bit of a spike down, but then rates went up. I mean, think too about when you look back too far in the past, like pre-dot-com bubble, this economy was a completely different economy than the economy we live in today. Fundamentally, even just the way commerce works and like the internet and stuff. So I think there is like a clear divider line either at the dot-com bubble time frame or like the 08 crash, because like monetary policy you could see just change so much where rates were just like at zero for so long. So we can look here and we could see like we could look for like that again, that crash there. It did cause some volatility in the markets, but ultimately it still rose anyways. And that's the reason why that happens is because investors like offload their assets at a high and then they borrow back and they see rates are coming down, then they'll borrow the money for cheap again and rebuy their assets after you scare everybody out of them.
Move the market downwards, reborrow, and then buy it back at an even cheaper rate. That's right. The other thing that's quite interesting as well is that when the Fed, when they announced that they were going to be raising rates, was back in November 2021, which of course was the top for Bitcoin in the last cycle. So that was something I was kind of doing a bit of research today on, and I'm excited for it. Obviously, I think in the short term you get that volatility, but money printing is always great for risk on assets too.
Well, you got a good point there about you should be drooling at the mouth at the thought of a rate cut that causes downside volatility where you could buy that dip. Like that's honestly how you should look at it. It's like any dip is a dip to buy because ultimately all this stuff's going higher. Because you can't outpace currency debasement and inflation. You just can't. There's nothing you could do about it because the Federal Reserve System, which is the backing of the entire world, is a fucking Ponzi scheme. It has to inflate to survive. So that means that they have to money print to keep the system going. So that means that all your asset prices are going to go forever against them. That's why I really challenge, crypto people to have a longer term horizon. And yeah, you can, if you have a longer term horizon and you do well over like an 8 to 10 year period of time, then yeah, you could safely take little bets on shitcoin meme coins and try to like do a 10x's in a day with $1 million or something. You know what I mean? It's like you can have fun.
I don't know about $1 million.
Well, I mean, you know what I'm saying? Like,
yeah,
1%. I'm talking about the guy that wrote it up for 10 years from Bitcoin and had like 100 million, and he puts $1 million into like a shitcoin. That's what some people are doing these days, and I'm just challenging people to, don't take it the wrong way. I'm challenging people to be more invested for the longer term time frames because it's actually gonna be better for you. It's healthier too, like on your mind and on your body and stuff. So, yeah.
Yeah, there's some of the
Buy the
guys who are
short-term pullback.
Yeah, well, this was I had a conversation on the phone today with a close friend of mine, and he's like, "Do you think it goes lower?" I said, "Of course, I think it goes lower." I mean, they came out with the inflation rate. What was it yesterday, the day before? And I was like, 2.9% in July. That's bollocks, man. They're all setting it up for this Fed meet up in September, 20th of September, I think it is, and they're going to reduce interest rates, and that's an opportunity. So maybe hang on to your dollar and get ready to purchase as things dip in the short term.
Yeah, absolutely. And like, what would that look like? I'm just going back to this like late 2000s kind of federal funds rate action, just to kind of compare and look at chart patterns and stuff. This isn't a prediction. This is just a looking for patterns and kind of seeing and feeling out what this might look like. And so, yeah, I mean, you could see rates bounce around a little bit, but ultimately, I think like it's not going to go like, I don't think we're going to run into a situation where this happens. I don't think we're going to go back to zero. So this elevated rates actually will be, I think, good for the market. As you can see, when it happened last time, we had a .com bubble. Well, what a better time than ever when you have all this excess money. It's already printed. You can print more. And you're going on the back of the AI boom and cryptocurrency boom. And who knows, new energy technologies. I mean, the list goes on and on and on for reasons why you should be bullish on the next decade in terms of innovation, for human innovation. And so like we could basically get like this kind of a bull run out of the next decade on this kind of fiscal policy. And that's why I kind of had that there, was like, okay, so what? You get like a little bit of a drop in rates, nothing too much, nothing too quickly. It just kind of stays relatively stable. You know, if you look for the mean, it looks something like that. Something like this would be the mean. And yeah, you just get a slight decline over the next like 6 or 7 years. I mean, this is 6 or 7 years of rates being just doing a slight year-over-year decline. And this would be a perfect environment to see this kinds of action, right? So like we're getting into that period now. Like that would bring us up here, 11,000 on the S&P. You know, would that really be that hard to believe? I don't think so.
Yeah, and that's 11,000 based on that roundabout, kind of looking around 29, something like that. That top.
Just based top would be October of 28, and this would even surprise me because, you know, if this is going to happen for the stock market, it's for sure going to happen for crypto. So your whole entire 4-year cycle theory is out the window, and we just stay elevated and prices just go up a lot longer. And Bitcoin goes up a lot longer. It's not so steep. It's more of a gradual 45-degree angle. And who knows what the price target would be on that situation. Like we're looking at September of 2028 for a peak here. But altcoins stayed diluted and beat up for years and years to go. Like another year or two, altcoins are just slowly grinding up, kind of like Sami's latest video. Go check out your friend Sami's latest video on the longer cycle and how it took Tron 2 cycles to get up and off and going. And it's doing it now because it's got $2 billion+ of stablecoin liquidity on the chain. And I think this next leg of the, while it's fresh in my mind, this next leg of this crypto market bull run, the ETF cycle, is going to be the what I'll call like the stablecoin minting frenzy, or the stablecoin minting mania, where stablecoin dominance really starts to make a run, and that means billions and billions of dollars of on-chain stablecoin liquidity, where lenders can get a nice ROI on money that they just collateralize, lock it in a bank, then the bank goes and issues stable coins on the blockchain. So they're paying the lender a yield. Then they're lending that money. Then they're putting those stable coins on the chain, and people are making, 5, 10, 15, 20% on these LTV loops on chain, which is like a cash positive system, which feeds back into the lending side, which allows us to mint more stable coins. And you just get this absolutely enormous liquidity base. It's a multi-chain gold rush for stablecoin liquidity, which legitimizes DeFi. And so I think there's a lot of things happening in parallel right now in the middle of this cycle that's going to make this blow this 4-year cycle theory to dust.
So you think that you'll see an extended kind of top this cycle? I know some people have gone different opinions, right? Like that it might even do kind of like a a top, follow the 4-year cycle and just automatically fall into it. Some people are saying, okay, we're going to have a quick top and then like a 2-year retracement or a long elongated bear market, but less volatility when it comes to Bitcoin. So it's kind of a protected movement to the downside.
Yeah, I mean, I think it could be all of the above, but it's just like this is your trajectory, is this logarithmic curve. So this is Bitcoin. Your trajectory is this. So the lows will be continuing to be higher. So like you could have booms and busts inside of this, but the lows goes from 55,000 by next September to 140,000 by 2027 and 200,000 by that September of 2028. And the high would be anywhere from 250K to next December to 425 by July or September of 2028. So, I mean, you could, but the thing is, it's the market's going to max pain everybody in every direction. So seesaw whipsaw you guys for years, and everyone's going to say, cycle this, cycle that. Well, guess what? The market changed right here when we had a double top. Everything's different now. And guess what? It even got worse when I say worse, I mean good, when the ETFs happened. Everything fundamentally, structurally changed. By the way, Bitcoin mining economy, super efficient now. People are mining giant organizations are mining on giant natural gas fields where the cost to produce Bitcoin is less than 1 cent per kilowatt hour. Biogas fields where they're turning industrial size farming operations into Bitcoin mining operations. So it's a plus EV. Like the cost to mint, you literally have miners now, instead of dumping Bitcoin, they're going back and taking on debt, shitty US debt at a low interest rate to go buy Bitcoin, because I know the Bitcoin year over year price appreciation is going to outpace the debt that they're going to owe. It's a hedge. Miners are hedging by buying Bitcoin. So I mean, so freaking bullish right now. It doesn't even matter. Everyone's shit doesn't matter. This is where it's going. It's already been legitimized. So if you go and play the day-to-day, whatever, this is why I challenge everyone to go 5 to 10 years out and just find good quality projects with utility and hang on.
Yeah, I've heard the theory of like a triple top this cycle where we see another all-time high come kind of January time, and then the third top, because we've already had the first one prior to the halving, a third top that kind of repeats itself towards that September, October time of 2025. Again, I'm just playing out theories that I've heard, different theories.
Something like this, where it comes down here and then it comes up for a triple top.
Correct.
And then it gets rejected.
Yes.
Yeah, totally. I mean, that's in the cards too, I guess. Yeah, I wouldn't discount that, although you're implying that the big holders of Bitcoin are gonna fade it and sell it at the same price that they kind of like. It's just the RR isn't there. What are you gonna do? Build up this giant liquidity base and then sell into it? I think they'd have more fun absorbing all the coins, and then there's just no supply. So then it naturally drifts upwards like this, over the next decade. It's definitely interesting, man. Nobody has the answers and everyone's just got a bunch of theories. But, I think ultimately, if you could close your eyes and come back in a decade, do you think Bitcoin's going to be down here? Or do you think it could be?
Oh, no. It's definitely going to be very high. And the funny thing is like, everyone was kind of fobbing off. That's a word that we use in the UK, like dismissing what may happen with the ETFs, right? And then the ETFs, I mean, it was a game changer. Like 2.5 months, and it did a brand new all-time high in a shortened period of time. That being said, it was insane. Like, I just remember at the time, around January time, February time, and then up until March, it was a game changer. And everyone's theories changed at that point, right? Everyone's theories changed. Now it's changed a lot, right? So from it being a top probably in January 2025, now it's like, oh, it might extend out a little bit more. We have to see what the markets do by the end of the year, etc. So everyone's speculating. A lot of people are speculating on what's going to happen. In the long run, I think Bitcoin will go into, on a long enough time basis, $1 million, but we're talking lots and lots and lots of years. But I think it is extremely controlled now. I think that the big financial institutions like BlackRock have accumulated enough, and they will be controlling that price. I had this discussion on an X Space where I said, they will control the markets, they will manipulate the markets to the ups and to the downside. And to their own benefit, but I do believe that they will control it and be able to move it in the direction they want it to move. I like those who sniped SolidX. The ones who held made a bunch. They made their milli quick. Yeah. We could talk about sniping. I mean, that's something that...
Yeah, sure. People really like this conversation.
Well, I think there's like common misconceptions with sniping and what it is, what it isn't, you know, how it works and stuff. It's just trying to get in on the first block when a project is launched. And there's ways of doing that. There's a lot of research that has to be done behind that to try and find out the contract address. It's not like the insiders just gave out the contract address to nobody. They're trying to, you know, bond, especially on Pulse Chain, right? They're trying to bond it with exotic pairs or slightly illiquid pairs. And so technically speaking, yes, I know guys who, for example, Tangang tickers, that sniped Tangang tickers, but they always launch their tickers with an exotic pair. But if you worked out what was launching and, you know, if you were a good wallet watcher, a tracer of wallets, then you might be able to do a manual buy, purchasing up a new ticker on the first block or when it's just not at launch and LP has just been added, using an exotic pair. And you're not using something like a Prodigy bot or something like that. Yeah, there's a lot of like woo-woo when it comes to sniping, but really it's just trying to get in as early as possible, getting a contract address as early as possible. And people who are good at that make a lot of money.
There's different strategies for that too. Like I've heard of some of these strategies where like they'll just look at certain specific wallets, and whenever they buy something, it'll buy something. Or like they'll set a bot up that anytime a new contract launches, they'll just buy like 50 cents of it or like $5 of it or something. And I know this is true of like, I don't know if Sonny told me this story of, you know, you guys know Sonny from the community. He made the A1A ecosystem. Well, he told me a story of how he bought Hexfire early. I don't know if it was from a bot or a manual buy, but he bought the Hexfire token early. And he did his first million X with Hexfire. I think it was like 94 cents turned into like $56,000 or something. It was absolutely insane.
That's crazy. I know guys who've done it, and we've done it on Solana as well. So we, I should say this. A friend of mine got in on some tickers early, like, and it's normal. They use Banana Bot, they use Prodigy, they use Photon. You know, but almost everyone's educated on using Photon. I don't know anyone who doesn't use Photon. It's very easy to connect to, and so it's very typical for that stuff to happen, that stuff to play out.
See, this is all like foreign to me. I've never used a bot before. But I mean, so I'm actually like trying to, like, you could teach me stuff about it. Never used one. Never. I tried. Let me say this. 2017. It was actually January of 2018. You guys probably know Crypto Crow. He's a old YouTuber, crypto guy, big Cardano fanboy from back in the day. He was talking about this thing called Profit Feeder, Profit Trader and Profit Feeder. So it was like a bot that you could set certain parameters in the field, and it would trade based on, you know, your parameters, which would basically, the bot would need to know, like, are you in a very bearish, a bullish, or a very bullish environment? And then it would adjust its parameters for how it would buy and sell. Anyway, so it was like scripting. You could totally do that. But my involvement was that I bought it and I never even set it up because, like, to me, it was too much for me. It was over my head. So that was back in the day.
It's like, if you're that side of things, the sniping side of things, it's once you get to a certain bag size, I guess you're wanting to mitigate risk. So what's the point in trying to like snipe everything up and take risk on random shit coins and things of that nature that may not necessarily do all right? You want to go back to the kind of native gas token and the surrounding tokens that have significant liquidity bonded to it. You know, and that comes onto a good subject of like, how much liquidity is enough liquidity? How, you know, there's a lot of controversy in the Pulse Chain ecosystem. It's like, what's real liquidity? And does this particular project have real liquidity? Like, is there enough liquidity to move $100,000 or not? And this is one of my arguments is, yes, in low liquid situations, the price can go up exponentially quicker. and also it can go down to the downside exponentially quicker. So there is opportunity in low liquidity coins. But I think in terms of maturing an ecosystem and growing it, you have to have significant amounts of liquidity on a longer term basis. Like you have to build that out. And I believe that you have to structure that out so that it doesn't just become an illiquid shitcoin chain. It has to have more and more liquidity that wants to participate. And I think this is why we see such popular excitement within Pulse Chain for Inc specifically, and also the farms that the percentage APY that you get from Inc. Because if you are able to protect that price and move that price up, you give the incentive to create more liquidity pools that are bigger, and then attract bigger players who come across to a different chain from other chains such as Ethereum.
Yeah, I have a lot of cool thoughts on that. Like to your Inc comparison, like Inc is like super liquid, so like you can actually move between Inc and PulseX or Inc and Pulse with like $5 million, $10 million, and there's some slippage there, but it's like not what you'd expect. I mean, there's so like obviously what I'm saying is like $100,000 doesn't crazily slip the price. It's only when you go from Pulse to Stables that you kind of get a little bit more slippage on that kind of size orders. But that is a really good base to build off of, a really good setup, like the Pulse, PulseX, and Inc kind of tripartite, and you could throw Hex in there as well. That combined liquidity is like almost $100 million of liquidity there, you know?
Yeah.
And that's amazing because it gives people the ability to ratio trade these coins, so you're not negatively impacting the health of the network or extracting bridged-in value directly, but you're able to increase your bag size through the number of units without much slippage, and ratio trade these coins on these like kind of like 3 to 6 month swing trades. And it makes it a fun game to play, and it gives people a real way to get an edge and make money, and there's enough liquidity to do it. And to your other part about part one of that question or commentary about illiquid coins versus liquid coins and like what's good or bad, there is no really good or bad setup. It's just kind of like your setup has to meet the demands or needs of the project. So, you know, I think a lot of like big players are going to be very disinterested in illiquid coins. But then some illiquid coins that have humble beginnings end up becoming really liquid down the road. And the AXiS token is a perfect example of that. It started with just $1,200, and now there's like $500,000 behind it of real WPLS backing, and then an additional 1.6 million across all of its connected pairs, which is a utility in and onto itself. But the question is like, how do you differentiate which coins are going to actually grow up and go out into the world and do something, and which ones are just like here for 24 hours and then they're gone?
That's the hard part. I mean, it's much better than being like a premium meme coin and pretending that you've got liquidity when it's only got 11K's worth of liquidity in it. Also,
there's the problem of, and I don't know how you feel about this, I'm really interested to hear your opinion on this. When it comes to like asymmetrical liquidity pairs where they're bonded and there's an equal amount of dollar value of both of them, versus like when you see these like meme coins with a lot of ask side sell pressure liquidity, but almost no bid support, it doesn't inspire a lot of confidence in its investors. So what would you say that that's a consideration?
To me, it's a fugazi, and it's like a sleight of hand, as per se, because to an individual that doesn't take any time to research or look and see what they're getting into, they see, I don't know, 100K's worth of liquidity or whatever it is. But when you realize that there's only like 11K's worth of wrap Pulse, you know, the gas tokens liquidity, you suddenly realize, oh, this is quicksand. I'm going to get stuck into this coin and never be able to get out. And this is the argument against V3, or one of the arguments against V3 is like you can put up these liquidity pairings where there's huge amounts of the meme coin or the native coin or whatever you want to call it, and then there's a tiny amount of the actual value that you want when you go to exit out, and it's just a fugazi. And so there's no real money. It's like fake liquidity, or as some people have coined it. And that's for me, I when I'm encouraging people to get into coins and think about that, they have to think about that. They have to. So we get a lot of hate at 9inch. Obviously, I'm part of the team there. We get a lot of hate because of price performance. But then you look at how much liquidity we have with Wrap Pulse, with other coins that people want. Maybe it's DAI, USDT, maybe it's wrapped ETH, something like that. We have huge amounts. Like a player can come in and out very easily into 9inch or BBC, for that matter. Mm-hmm. Whereas other dexes don't get as much hate because maybe the price performance has gone down, say, minus 50% from its top, but the actual liquidity that's available there is minuscule in comparison. Not even 100K's worth of native wrap pulse in terms of dollar value. So, yeah, I personally, this is my argument against it, and this is kind of the pushback that I've been putting out whenever I've had like criticism for the coins that I've suggested or been in. But when I've suggested things like the solid index, it's got a lot of liquidity. It's got huge amounts of liquidity. So you might be upset by the downside pressure from sellers currently, but there's way more liquidity than some other tokens.
Yeah, I mean, there's the thing is like in that downside move, a lot of people were enriched. There used to be like 15 billion pulse paired with SolidX, and now it's down to 3 billion. But that's not because it got rugged. That's because people took it off the table. But that was a lot of value creation. Now, when the index moves back the other way, how much of that is going to come back in and chase? That's what's interesting to me is like trying to figure out those dynamics. And so a couple things in conjunction with your thoughts on DEX tokens. Like, one of my favorite plays on 9inch right now is the PLS. And I'm saying this, and you guys are probably going to go use it, and it's going to lower my rewards. But like, so the PDI WPLS pair on 9inch is paying like 30 to 40% APR in compounded rewards to the LP, not through the BBC, through the compounded LP rewards. So if you think PDI's got a schizophrenic, crazy community that's like diehard believers, and then you got Pulse, which everybody wants more Pulse. I don't see how you wouldn't want more of both of them. And so I really like that particular pair on 9inch, and it's thick. I think there's like 300-400K on there, and that's at these prices. And so
if you go to a Pulse Chain conference, like you'll know how do I say this in the most respectful way possible, how much of a fan base it has, the PDI kind of Teddy ecosystem. Like it's crazy. They love that stuff, and I got the chance to meet I've forgotten his name now off the top of my head.
Maria, the dev.
Maria, that's the one. Yeah. Cool person, really cool person, interesting person to talk to as well. But it is, it's taken on, and maybe with the help of B Roots, Ian Heisig, and others as well. But we at 9inch, that was the thing. We were looking at the pools and we're like, this is such a popular token. This is something that should be rewarded. This is something that people like, whether it's speculative play, whether it ever plays out to go up to $1, or if it's impossible to do so. But people like it. People like the narrative. People like the coin itself. And we wanted to reward people for that. We rewarded other ecosystems or, individuals, and they just extracted from us and told us that we were pieces of poo. So I'd rather give it to people that actually like us than people that don't.
Well, and like the PDI guys are here to stay. So look at this. Look at this. Like, I bring this up because we're talking about mind share and attention. This thing's been seen by 260,000 views have been hit this page. And huge shout out to GoPulse, the premier Pulse Chain suite. They support so many different tokens and different tools on here, but 259,000 views this page has had. By comparison, you could look at some of these other tokens. Let's see, what's another popular one? What's another really popular coin?
Teddy.
Yeah, Bear. Okay.
Bear, yeah.
It's in the same ecosystem. So, but I want to think of one that's not this one. So Bear, by comparison, has only been seen by 61,000. So this narrative about a potential truly decentralized stablecoin potentially going up to $1 and pegging is enough that it's got 5 times as many people interested in it that they will go and view the page here on GoPulse. So it's fun, go watch some of these metrics. Oftentimes, like in the same way that V3 liquidity can be deceiving when you see a dollar amount, but 90% of it's sell side, it's not really indicative of a valuable thing, right? So the same way, like I beg you guys to go look a little deeper on these things, look into the founder, the distribution of coins, the tokenomics, how many page views you have on GoPulse. That stuff matters more than I think people think, of giving you signal that you can use and leverage that you can use to get into a good position on some of this stuff. And then, so to piggyback off the part about the solid index, I just wanted to bring this up. So I sorted here by liquidity. This is a dashboard from hexfire.io. Crispy Man heads this website up. He has some of the most deep data and analytics that almost anybody else offers on the Pulse chain. And you can actually go through here and you could see hex pairs. Okay, there's $20 million, $20.5 million of liquidity amongst all these different pairs. And you can go down here and sort hex pulse, Deci hex, ehex WPLS, UFO hex, and you can see where is the liquidity coming from. What's the APY on a 24-hour format or a 6-hour format? How much volume has come through the pairs? And so this is a very powerful tool for coming in here and getting a broad scope view of how sub communities are performing on the Pulse chain. And in regards to the solid index here, our biggest pool in all of the chain. Okay, let me say this. This doesn't account for the Fux exchange yet because we're waiting on the Fux team or Yellowcake or Fast Abdul from 2Fux to give us access to that subgraph so we can actually implement that into here. But that's important.
Because the guys online were trying to say that the liquidity gone down to a few dollars, but that was on the other exchanges, right? It wasn't on.
Well, so this has got 9-inch, it's got PulseX, it's got which one? 9mm, and we're waiting on to integrate Fux. And so if just for the 2 solid pool, for example, the 2 solid pool has got about $500,000 of liquidity in it as well. So that would put us as an ecosystem at $2.67 million of backing value. And then if you want to know, okay, so yeah, you got Solid X DAI and King 2 Solid X and like all these other altcoins. If you just want to sort for real maximum extractable value, you just type in Pulse here and you click go. And so you can see here there's currently 816K of actual PLS backing the prices of Solid X, AXiS, Fire, Nope. But then there's an additional 200 and some odd million on the 2 solid pool. There's an additional 2 billion Pulse on the Nope WPLS pool. Both of those are on Fux. So we have about $1 million of actual real PLS backing at the bottom where Pulse is sitting here at freaking dog shit prices of 4 zeros and a 3.5, right? So at these, so imagine Pulse goes and does a 5x or something over the next year, and liquidity all stays the same. It won't. It'll grow. People will add in as things go up. This number then obviously 4 to 5x's. So you're looking at this pool could be these 4 assets. The solid index could grow to a size of like $4 or $5 million just on Pulse appreciation.
Yeah. And this is the thing. This is why I'm kind of like, I'll push my guys to go into things that are pretty liquid. Like you don't want to get stuck. You don't want to get trapped in a coin like that. Unfortunately, a friend of mine, I'm not going to say the ticker symbol, but a famous hex influencer had a ticker and pulled the liquidity, and he's stuck in a coin that he can't necessarily sell or can't get out of, and put a lot of money into it based on the reputation of that influencer. And supposedly there's a game, there's like this benevolent action that's meant to be happening on PulseX that's going to be earning some more ink, and then putting it back in and increasing that liquidity pool. But what you've done is you've ruined the reputation of the coin itself, and also you've also got an event where once you've put that back in, the price is going to get destroyed. Yeah, it's a sell event. Yeah. Give me two seconds, AXiS, because just give me 2 seconds. Carry on with what you're saying.
Yeah, no problem. While you're doing that, so it's interesting, guys. Like this, we bring up a lot of good points about liquidity and optics and stuff. Like in terms of, like if this is going to be a tough thing to hear for a lot of people, but if you launch something and you make one misstep, you totally destroy the reputation of that thing, and it's like totally invalidates it. And if I was to make one major mistake, my asset would be pointless to invest in too. So it's like if Richard Hart, the OA, made a mistake, the whole entire Pulse chain would would go down, right? It would actually like literally die because it would be like such a catastrophic fundamental error. Like you just don't want to see, you don't want to give people reasons to hate you more than they already will, just based on like the success of something. So I'm just going to run through some comments here while I wait for him to come back. All I want for Christmas is PDI Inc. LP farm on PLSX.
Yeah, I've just requested that for 9-inch, so I've just said that to the devs. I saw that comment.
Cool.
I don't know if it'll be there, but I've chucked it in there.
Yeah. This Fit Finesse had a big one. Every now and then, serious faces are put on to say holding serious coins long term is wise, but the reality is most people want to completely sell out at a top. Public sees that, bad look for crypto. Yep. You're always going to have the guys that are waiting and to want out, and on a long enough time frame, they run out of power in a system. That's just how it works. They run out of coins to sell, and so as long as the tech is good and it's 100% uptime and it's got value. By the way, crypto in general has value. This chain has a lot of value because it's bridged in liquidity to market cap ratio across the 4 major assets is like a 1-to-20 ratio, which is super high. Comparatively speaking, Ethereum is like there's like $3 or $4 billion of on-chain liquidity, but it's a $400 billion market cap. I mean, that ratio is like 100x difference versus us, which we're only a 20x difference. It's like it's a massive difference in size. And so I just think people are totally like missing the point here with how valuable Pulse Chain could be. And that's not even to say anything that Richard's devs might be cooking up for the future.
Mm-hmm. Oh, this is the thing as well. I think a lot of people will talk about Pulse Chain being a ghost chain and stuff like that. I mean, we have periods of extreme excitement and we have periods of high volume, and then we kind of have these like these moments where it drops off, probably like now where the volume drops down. But I mean, just in comparison to other chains as well, you know, like we're not far off of Phantom's numbers when it comes to daily volume right now. And our TVL has been way higher in the past, but I look at it and I go, well, apart from possibly Solana and Base, what else is really popping off? What else is really like having huge amounts of volume? I don't see it within the market, apart from those 2 chains, maybe a couple others, maybe Arbitrum in there as well. But yeah,
it's just not time yet. It'll come.
Yeah.
You know what would bring a lot of volume back to Pulse Chain is like a big $200 million deposit onto the Pulse Chain bridge. Like it would just be like a flurry of money trying to get across to get a piece of that 200 mil.
Yeah,
so there's plenty of cars in the hat, I think.
100%. And I think everyone tries to compare it to the best blockchains or the ones that have been not best. The better wording for that would be the ones that are succeeding currently or seem to be succeeding currently. And so, you know, there is a high expectation of performance in this particular cycle. And you got to remember that we are still a first cycle layer 1. Like we're competing with maybe Sui, say, Aptos, technically speaking, but we're trying to compete with Solana. We're trying to compete with Ethereum. We're trying to compete with BSC and other chains like that. But we don't have the maturity of it.
Yeah, but I actually think in terms of Ethereum, I look at them kind of like a twin turbo engine, where like if the load on Ethereum gets too much, people can come across the Pulse Chain to leverage it for gains. And like once like if Ethereum goes 3 to 4x and it gets a little bit heavy, I mean, it's a quick rotation out, even if it's just a 6-week or 12-week rotation into Pulse Chain for some mad gains. And then, you know, a lot of the tourists will go back to Ethereum, but that's the point of it right now is like you're gonna capture some of that and retain that value long term, especially on the assets that people get in low and then they ride them up for massive gains, and it's like a never sell. I mean, of course they're going to sell it, but they'll never be able to sell all the units that they acquired at the lows. I think people underestimate the power of those early cycle 1 coins, or you could, you know, some people differ on opinion on this, but Pulse Chain is cheap, you know, for what it does. And, you know, and when it has its move to the upside, it's not coming back and fully retracing the move. So it's like there's a point where if you got the lows, it's a never sell all your bag because it never comes back all the way down. And if you had done that with Ethereum, for example, or Matic, Polygon, or what's some other ones? Dogecoin or even
Well,
Litecoin. Any of the early coin. Like if you got in early on those coins, the floor price is
even
a
the
lot
early
higher.
L2s as well. Even the early L2s, EVM L2s. Like, look how well Arbitrum and Base are doing right now. And that's just based on the fact that ETH can't really. They're trying to deal with their network congestion. Obviously, things are down now, but they've kind of facilitated their upgrades towards the L2s, and so the L2s are performing pretty damn good, well as well. And I say this to other people that don't really know Base, for example. Base is only really popped off because it's just meme coins. It's like Solana version 2. It's like it's just that's what it is. It's not. They're not doing DeFi on there. It's not that exciting over there. It's just like, okay, what shitcoin can I get into that could pump 50, 100x or whatever?
I have an idea of a shitcoin that could do it. That would totally confuse everybody, and they would be like, "How is that? How in the hell is that even possible that it just did that?" Let me show you my chart here for it. If I can find it.
Oh, speaking of which, I see that comment about crazy comical to know that we dropped 99% in Hex. The reversal upside would be monumental. Interestingly enough, okay, so my viewpoint on Hex has changed a little bit, but then we saw actually that it's still got a very big, strong core group of people and belief in the coin itself. It's very low liquidity as well, so it can move quite quickly.
There's about 20 million. It's about 10 million PLS paired with $10 million of Hex.
And then the other thing that you have to take into account, I mean, we just had a reversal on the decision for the gatekeeping from Binance, which was really interesting because at that point I'm like, yeah, you know what, I might get myself a bigger bag. I might buy some more Hex because,
dude, you should. I mean, this is like that inflection point. Look at the chart I got up. This is that shitcoin I was talking about. It's like, look at guys, like this is the most, okay, we're coming back into these levels here. We're basically trying to flip that as a support right now on Hex. This is like the all-time Hex chart with the P-Hex price. Like we're basically flipping these levels from E-Hex as support now.
I mean, I hope Hex succeeds really in the long term because I can't watch another Johnny Chaos video and not feel sorry for him. So
poor Johnny. Well, hey, this whole overturned lawsuit against Hex and stuff, that's a step in the right direction, I think. Like if we can get proper listings fairly on big places where there's a lot of eyes, that's going to bode really well for a reversal. And so the way I see this playing out, guys, is, I've been waiting a long time for Hex to finally do what I thought it could do. But I really think we'll get a wave 1, and then we'll get rejected off that like 2 cent level, come all the way back down, and we'll get a wave 3 like you couldn't even believe, maybe go up and test this 12-cent level is a resistance, and maybe maybe we break back down there, and then we get a final wave 5 that gets us up to like 30 to 50 cents, and then that's it for the cycle. Or we get adoption and it goes up to that level, and then we get like $1, and then it comes back down hard. But I mean, you're looking at like a 4 to 5 year time frame here, guys. And most people are going to cringe at that, but you got to get rid of all the fake hexagons that are still staked fat from back in these days that want out. They're going to get out here. It's just reality. I mean, there's a lot of them.
Big reminders, as the price of that starts to increase, the EESs go up significantly, especially in a bull run or in a bullish sentiment. Mm-hmm. There are more EESs, emergency end stakes, in a bull run than there is in a bear market.
And I think that the market makers can strategically plan for that and absorb a lot of that supply in this zone right here, below 10 cents. And if they do it right, and this is painful, and it's 2.5 years of this, then this thing can really go parabolic after we break up. But first, we got to get all of the guys that want out for a low price. So we have to, it's just a market maker strat, man. Lowest amount of input costs to get rid of all the dead weight. And then once all the sell pressure is relatively gone, you can mark it up.
I mean, selfishly, I wanted Kareem the Dream to kind of EES all his stakes, but
Kareem will dump his Hedron, which still hurts the Hex price because Hedron's biggest pair is Hex. So yeah, it's brutal. But it's I still think that because without Pulse Chain, Hex liquidity would be probably in a worse shape, but it would also be, we'd probably be up here though. Hex would have probably bottomed here. We would have came back down. Let me reset all this. Going back to the fork of Pulse Chain, had we not had such a crazy chaotic event, we would have came down double bottomed and we would have been working our way out by now. And we would be up in these ranges, maybe in the middle of the bull. So all you have to really think of is you take this action here and you just put it off here. You know, he'd be sideways like this. And then we'd be getting ready for that next level, which would be around between 5 and 10 cents roughly. Maybe 3 and 10 cents is where we'd be. If there was no Pulse Chain, no PLSX, no Ink, no PHEX, if all that value had stayed in there. And guess what? We'd have Gwei at 3.1 today and think people would be just fine. So, but in the long run, you know, having our own network is going to be amazing. So just hang in there, guys.
Yeah, and also the kind of maturity and the mentality has changed a little bit. I mean, it's definitely opened lots of different doors. Pulse Chain as a system and ecosystem rather than just a singular coin. Like I feel like a lot of people are starting to expand themselves out, being less culty and a bit more like, okay, I might start my own project, or I might do this. I can do so much on this chain. I can do, and I feel like we're starting to get away from maybe the more cult-like vibe that it used to have or previously did have.
Oh, and when we're on CoinMarketCap in spot number 96, you know, to start, it'll be more accepted then. You know, it'll be, at least it's not, you know, getting gatekeeped. You know, you know, that'll start people thinking like, okay, maybe it wasn't a scam. Plus you'll get a whole new cohort of new crypto guys that have never seen Hex before.
Yeah. And then you Hex on the ETH 100x. I remember Hex on ETH. That was back in the day when we had like what was his name?
Jim Rat, man, come on.
Where is
Jim
that
Rat
guy,
and Sam
man?
Stolt. Yeah. Oh, light as a feather. I'll never forget. Light as a
That's
feather.
right. KPK, the good old days, man. You know.
Hey, they'll be back. They'll be back.
I know, but I was disappointed. I was disappointed in a lot of Hexicans and a lot of OGs that decided to disappear. I mean, shout out to Crypto Coffee, kind of stayed around DCC.
Hell yeah. Crypto
I was
Coffee,
so
huge shout out. You, MGC, stuck around and provided
I
good
don't,
data.
I wasn't. Yeah, but back in the day, I wasn't.
Well, you filled
even
the role, man. You filled the role.
Yeah, but it's still like I feel. I don't know. It's kind of like I felt a little bit betrayed by it, because from the outside looking in, it's like, okay, a lot of these OGs did very, very well in 21 bull run, and then off they were. They're gone. The work is done now. They've made their profits and they're gone. And that can be very disappointing. It can also feel like betrayal, especially if you put any trust in that YouTuber or streamer or individual that you've been watching.
Yeah.
And so I filled that role. You filled that role. A lot of other individuals have come into the mix. I mean, Somni wasn't even around in 21, and look how well he's done as well. Mm-hmm. But it is just like, and some of these OGs will complain about the newer YouTubers or the newer guys who came in and filled that role and ended up becoming representation for this ecosystem. But you left. So what did you expect? You know, you left a void, and so someone filled that void and ended up taking on that role that you should have been in, I guess.
Joe makes a good point here. EHEX is down bad because Uniswap banned it. That definitely has an impact on why, you know, we're being missed. And so, you know, with an overturn on the CoinMarketCap thing, I wouldn't, and then, you know, what happens with the case where Richard gets out of it, like, I don't see why Uniswap wouldn't reverse their decision to ban the contract, which, by the way, I think is ridiculous in its own right.
Well, Uniswap are cucks, so, you know, Hayden Adams is a cuck. But I'm looking forward to V4. That'll be interesting. Set to release in Q3 of this year. So.
Is it? Okay, cool. That's good to know. I've looked a little bit into it. It's a different system that kind of, it's like a hybrid of like limit orders meets LP meets. Yeah, I looked a little bit into it. I'm excited to know more. Looking forward to it. Obviously, LP is my jam. So.
Yeah. Are you still? I can presume you're still providing some sort of liquidity.
I strictly only use LP to move around in the market. I don't use the buy and sell unless I'm market buying a coin with PLS. I'm LPing. Yeah, for sure. Love LP. I support a lot of assets, you guys.
We have great education in that in our system, but as said earlier in the broadcast, it's like other systems, they don't have a clue. They don't care. Buy the coin, wait for it to go up to a certain market cap, sell the coin. That's press that red button as quickly as possible. Doesn't matter how much price impact and slippage you take on, So that's one thing that also makes me slightly bullish on what may happen in the next year or so, especially with the price of things moving up. People are going to probably put sell walls up rather than just necessarily destroying the price, which could be better for certain tokens, certain assets in the long run.
Hey, this comment here about Ryan says, am I seriously suggesting it could take 5 years for Hex to get to $1? This is like such a huge signal, guys. Like Ryan is graciously letting himself be sacrificed on the altar as the signal that you're waiting for. This type of mentality of that being too long for $1 Hex is the exact reason why it should probably take, 3 to 5 years, I would say, to get there at this point. Now, this is because things have fundamentally changed since the days of EHEX when it was just its own single asset. Something that I got wrong was that EHEX would actually be in a better place, and then the Richard Fudd tweet, and then boom, we got smoked. But due to some temporary brand damage, it's going to take a little bit longer, I think. But it doesn't mean that the combined Hex price can't hit $1 this cycle or more. It totally could. I'm just saying, be prepared for it to take longer. From when Amazon went down minus 95%, it did take 4.5 years to get back up to a decent price. And so just be patient on that. If you're relying on $1 Hex by the end of next year, maybe you should rethink your strategy, because things have changed. The metagame on Pulse Chain is completely different, and this is something that every single day, me and my group of 126 people in the boardroom are actively trying to get edge in the market and find out how to outcompete in the super competitive gold rush that's happening on Pulse Chain.
I think it's a fair point. Everyone had that dollar marker last cycle, and they were so convinced on it, and it may have, but the sentiment changed. Do you think that maybe the sentiment now for Hex, obviously it's quite down, and a lot of people are still very down on the product itself, to the point where people don't want to buy it. Mm-hmm. But do you think if it had gone down, say 95% as opposed to 99%, anything would have changed? Or even if it went down to 90 and held that 90% down rate in that first cycle? Mm-hmm. Do you think the sentiment would have been different?
The sentiment would be a lot better, and we wouldn't feel so much like this is an existential risk to the protocol. For sure. I'm in agreement with that. But that doesn't mean I still think that this is now, instead of it being in that position where we're kind of a little more better sentiment, it's just completely hidden now. It's like for all intents and purposes, Hex doesn't even exist anymore in the minds of 90% of cryptocurrency, 99% of cryptocurrency. Hex doesn't even exist. It died, but the transaction log and the volume and stuff says otherwise on Pulse Chain. So, and
every time I post anything about Hex, anything, like I'll put something like, is Hex dead or something like that. It's an engagement tweet, right? It's a tweet trying to spice things up. It gets so many comments. It gets so much.
There's so many Hexicans. I literally put a tweet out today the same way. I just said, hey, the Hexican movement is not as far from dead. Let's see let's see what it had for engagement. It's pretty good, I bet. Yeah, like I get 100 people already liked it, seen by 2,000 impressions, and I just posted it 4 hours ago. And it's like nothing else on Twitter gets that kind of attention. Like I make any other tweet about really smart macro or really good charts, or it doesn't even get anywhere near the amount of engagement.
There is one more. The old Ink Maxis. Let's go.
Oh yeah, Ink Maxis. They're in a hot second place, right?
Let's go. The one token that didn't have a sacrifice, that's only in the millions in terms of supply. We love Ink.
Yep,
but I don't know why it's become like
dark horse for sure.
People love it. I think that because there's certain factors that don't play into, like low supply, no sacrifice phase for it. The not day one hexagons. You have to mine it yourself. It's only I think it's 32 million supply every year going into the system. And now I'm trying to get people to do the PFP thing, like the green PFP, because I do notice that if you have some cool PFPs and there's like a coordinated effort of a bit of a cabal with the same PFP or similar, like their own version of it, it definitely creates traction, and especially in any spaces or anything on Twitter. Like people love associating with a brand or a team or a identity. Republican, Democrat is a pure example of that. MAGA hats, all of that kind of stuff. So I'm trying to stimulate that. I'm trying to get guys to do that with some of the Inkable. Shout out to you guys.
So as we get to the end of the stream, and
bro, we could talk for another 2 hours. I bet
we could.
Because there were so many subjects.
Let's spare people. And hey, you know what? Let's do this more often. I don't see why we shouldn't. MGC, he's back in action on the axisALiVE channel.
That's it. I'll come back for streams, man. It's been great.
Hey, do you want to wrap up with just some bullish news on the ETH inflows?
Yeah. Can I share a screen on here?
Absolutely.
Let's do it. Well, good news is that we're starting to see. So for those people that don't know, it took approximately a month when it came to the ETH ETF before the price of Bitcoin from where it started. So the ETF started at, I think it was like 44K. Price dropped down and came back up to 44K. It took approximately 29 days total, all right, of trading days, because there was so much outflow from the Grayscale GBTC product. And the same thing happened because basically as they convert from trust to an ETF, they have a huge amount of Bitcoin that then often gets dumped on the market that they don't necessarily need. They end up selling off. With the Ethereum side of things, let me just share my screen here. Let's do the entire screen. Boom. All right. So what I want to show here is, okay, you can see there's been a lot of outflows, and all of it comes really predominantly from this one here, right? The ETH, which is the Grayscale product. But Grayscale also did a mini trust, and that mini trust is a fractionalized version of this, which has extremely low fees. So this has actually been getting some gains. It's not been having any red days. That's something that was brand new to the product of the ETH ETF. And they've just recently launched a BTC version of this, a mini trust. So this is the number that we were looking at. The outflows were huge, right? From the beginning, going down. It has been getting less and less and less. We're getting down towards the 16 million mark here in terms of outflows. Expect outflows because usually, this is Grayscale GBTC versus ETH asset loss since conversion. So from 100%, it usually gets down to around about 46% and just kind of hangs around there. But what we've seen is it got to 72.1%. And this was around the time when Bitcoin really started to pump, because all of the other ETFs were outpacing, and the inflows were outpacing the outflows that were coming from GBTC. So then you start to see price appreciation based on the fact that the other ETFs were mitigating this loss. What we've seen with the ETH ETF is that within 18 days, we're at 72.1%. So what took 31 days, it's done in 18 days. That's not to say that we won't get more outflows, but you can see the curvature of this graph that is starting to steady itself out. This may go down further. It may go down towards the kind of 40% mark, 44%, but the inflows have been making up the difference. And that's why you're starting to see net positive days here. You're starting to see, and then there's some data that's actually missing here from the other ETFs, but we're actually starting to see these green days coming in now, the last 3 days. We had a few red days just before that, but then we had big green days here. So we're starting to see that the spot ETF is starting to bring in some money. Now, what a lot of people forget as well is that 30% of Ethereum is staked and locked up off the market, and it takes less to go in. Doesn't mean to say that we're going to be getting the same inflows that BTC gets on a daily basis, probably about 30%. However, it can have this has the potential to really move. And the reason why I say that is because I said to a lot of guys in the Patreon group and a lot of guys who watch my content is that give it 30 days or 21 days of like Monday to Friday trading volume from when the ETF started. Give it 30 days in total, and you'll see a real effect on ETH. I think you'll see an effect on ETH. And so I'm very bullish on this. I'm watching this on a daily basis. I'm seeing what the inflows are. I'm excited for today's inflows and outflows once we get that data as well. And what you'll start to see is you may start to see people, especially if they start to see ETH start to run versus BTC, because it's been down. It has been extremely negative as a ratio versus BTC. As we start to see that change, you'll start to get a more bullish sentiment, and you may start to see some of the BTC people who have allocated to the BTC ETF start to move their allocation into Ethereum. But I am very bullish on the Ethereum ETF. I just think that people didn't understand. Look, there was 9,199, I think that's ETH, or it might be in millions here, that was seeded before this launch. This was in the trust prior to launch, and so there has to be a rebalance from Grayscale's product. It's very expensive. It's like 2.50% fees. When you look at the other fees, it's 0.25 approximately. So there is going to be a rebalancing and redistribution as well when it comes to the ETFs.
Amazing, dude. Thank you so much for that detailed analysis on the ETFs. And I'm feeling pretty good about it after seeing that chart.
Yeah. I mean, look, I know outflow isn't always great to see, but to see that happen in 18 days, what took 31 days to do for GBTC, this seems more sped up if it follows what GBTC did.
Hey man, the bull market's coming. The next big wave. It could be just like the gold ETF back in the days, where this was just like 8 years of up only, 45 degree. It won't be so parabolic, but it could just be nice and steady growth where we actually get real adoption. Wouldn't that be phenomenal?
BlackRock are already singing the praises of the BTC ETF, right?
It was the greatest ETF product launch in all time.
Of all time, yeah. And I also believe that in March, that there will be, maybe March, April time, there will be a Sol ETF that will be approved, because there's 2 applicants already for it. And the final deadline is March 2025.
Amazing.
Not funny.
We got a last couple things, guys, before we wrap up. To everyone, thank MGC for coming here and being the GOAT and providing some high quality conversation, discussion, and content. I got to announce that next March, I don't know the dates, check the tweet. Maybe I should pull that up. Well, first of all, I got a new piece of content coming for axisALiVE.com members. The long awaited technical analysis mastery course is starting at the end of the month. It'll be every Wednesday night, I think, tentatively every Wednesday night at 7 Eastern. If you're an AXiSALiVE member, I'll be doing lessons on through this course. It's DeFi edition, so it's inspired by Crypto Cred, just a famous TA. He put together a TA course like 4 or 5 years ago, and so it's inspired by a lot of the content that's in there. But then I adapted it for DeFi with like liquidity, chain analysis, market cycle theory, and on and on. So I'm super excited to get that started. I know my members have been waiting for that for over a year. So it's time to finally launch that and get it moving. So if you're interested in this, please go to axisALiVE.com and check the services page. All you have to do is become a member. You can sign up for the monthly membership and partake every Wednesday night. And then lastly, but not least, if you want to go to there's an event going on next March. I think it's the 3rd through the 6th. Let me double check. It's the Vegas event. So let's see here. Let me preface by saying this. Okay, so there's an event coming up. It's in Las Vegas. It's at the Flamingo Las Vegas Conference Center, the 6th through the 9th of next year. Prices are high, but if you get in before September 15th, you get a 36.9% discount for using discount code AXiS. So if you want to come and hang out with some of the influencers in the community, or come listen to the conference days, or be a part of it in the flesh. From my own experience, it's been most of my growth in this space has come from going to live events and actually shaking somebody's hand and talking about what's going on that you don't hear about publicly. So if you're interested in that sort of thing, go check out the website, pulsechaintour.com/conference, and go sign up. Use AXiS code AXiS for 36.9% discount. But that discount ends on September 15th. So you got to take care of it while it's fresh.
I'm gonna speak to the organizers. I think I want to be at that event. I think I'm gonna go there because I'm not too far away from Vegas, and so right now, so I might pop across and see if I can get Hexabastard to go. because I think there's quite a lot of guys coming across like yourself, like B Roots is going to be there. I think it would be a cool DCC definitely would be there, probably Crypto Coffee. So it'd be a cool meetup. It'd be good to do a mega stream out there.
Absolutely. I'm hoping to see you guys out there. Hey guys, thank you so much. Thank you MGC for joining me today. It's been a great conversation.
Awesome.
Any last things you want to say before we take off?
No, like, share, and subscribe, and follow AXiS, follow myself as well. If you don't know, Money Gang Crypto on Twitter, X, whatever you want to call it. And yeah, appreciate you watching, guys, and give this a like, put a comment in there. It always helps the algorithm. So put it out there. That'd be great.
All right, guys, keep living your best life. Solid X forever. Let's go, baby.
Let's go.